Are we seeing? There we go. We're seeing we're seeing the presentation, right? Right, Dave?
Yep, yeah, you're good.
Right.
Yep, for sure.
Perfect. All right, guys. Good afternoon. Thank you to Dave. Thank you to the NPDA for inviting me here to speak with you guys. We are a proud partner of the NPDA, and I'll talk a little bit about this in my next slide. But I was a power sport dealer for the first 17 years of my career, and so I'm coming at this from that perspective. But also, had the NPDA been around when I was a dealer, I certainly would have been involved, and it's been really fun over the last 2 years of our involvement to be able to bring important information like this to you guys. I could discuss topics for hours. If you've seen me speak, if you've read my editorials, if you've talked to me in person, you know that there's a variety of topics out there specifically around insurance and risk management for dealers. Today, I have some very specific information that is pretty new that I want to talk about. With that being said, though, I love making these dialogues with individuals. It's harder when I'm online like this. So if you have a question, any question about insurance, please drop it in the chat, and Dave will ping me, and we'll get to it. Any question is open, insurance related, of course. All right. So a little bit about myself and my family. My brother and my parents and I started a dealership that was evolved into what was called TTRNO, or the Transportation Revolution in New Orleans. It was founded in 2002, and we sold it in 2019 to a larger group. What I'll tell you is that my mom decided to get into the business because she wanted to sell Vespas. My brother and I and my had never and my mom, brother, and I had never ridden in our lives. My dad had a Harley. He was a CPA, and had never been in retail in our lives. But we jumped in with 2 feet here, with learning how to get into the business. And if you've heard my brother speak, my brother is also a consultant in the industry. He tells the story as well. We didn't know how to ride a bike until the first bikes arrived at my parents' house on a July day in 2002. So I like to parallel that with my evolution of my career into insurance. When I got into the power sports business, didn't know anything about it. By the end, we were multiple Power 50 winners, a lot of accolades in that time, road raced. And so I took the same enthusiasm and got into commercial risk management and insurance 5 years ago, specifically looking at the power sports industry and where we could help. It was my experience through being a dealer, being in 20 clubs, being very involved just in the industry as a dealer. There was never anyone that could truly answer insurance questions. And I found that that was kind of a hole in the market for dealers. And so my goal was to become the expert in the space. So that's kind of how I've gotten here over the time, over these last 5 years, in the evolution of my career, being able to kind of bridge my previous career with my new career. And I also like it because power sport dealers don't require me to wear a suit and tie to come see them. So I can still stay pretty casual. Um,
Yeah, looking at our list of attendees, I don't think we have very many suits and ties on there
and I'm
either.
sure there's some of you on here that I know. So hello, if I don't know you, hopefully I'll know you pretty soon.
Yep.
So that's a little bit about me. I do want to talk about our company. I think that this is a really important part of our story and of my story. When I first got into insurance, I went and worked for one of the top 10 huge firms. I learned a ton. But what I also learned was that the insurance business does not move quickly and is not very flexible when things change. And I picked up the phone one day from a call from a recruiter that said, "Hey, what if you could create your own vertical within insurance?" I said, "I have a whole plan." And that's how I ended up here. So just to kind of give you a little history, Huckle is our parent company. I think the story is important because it talks about the entrepreneurial spirit of the founding of our company. And I always bring this up when I'm talking to dealers because it's the same entrepreneurial spirit that all of you have too, who are fighting every day to give this great experience to your customers. So Huckle actually started as a company called Go Wireless. The owner of the company, Kevin Elder, started with one Verizon store and grew to 800 Verizon stores all over the country. In that time, trying to find new ways to create revenue, he employed Steve Thompson, who's the president of our agency, to create one of the first to market cell phone insurance plans. And so we actually got into the insurance business by being in the cell phone business, which is where the name Cell Brokerage came from. From there, a small agency, we're Las Vegas based. I'm still in New Orleans, but the company's based in Las Vegas. Uh, from there, they created a small personal lines and small business agency that has grown what it is grown into today. In the past couple of years, the Go Wireless section of our business has been sold off, and the holding company is now called Huckle. So within the insurance risk management vertical, Apiar, which is the division that I work for, is what is considered middle market. So in between really small business and enterprise, which is like a big swath of businesses, but that's where you guys fit in as dealers because of the amount of premiums that you pay to be in this business. I talked about the flexibility and resources that were not there previously. The coolest thing about being here is that, for 6 months before I even started, we business planned. We looked at, how we wanted to come to market, how we wanted to put ourselves in this industry. And in 2 short years, we've really kind of solidified ourselves as the experts in the space and have actually grown the team. So from a customer kind of business development standpoint, it's not only myself who's handling this now. My colleague, Nick Campbell, who works out of our Phoenix office, is now helping me with our smaller dealers. And I think Nick's on the call today. So, hey, Nick, if you're here. So that's the history of who we are and how we got here. All right. So what's going on in the insurance market right now for PowerSport dealers specifically? It's shrinking, and it's been shrinking gradually in my entire 5 years of being in this business. In the last 5 years, we've lost four major underwriters that have pulled out of the market. And some of you guys may have been affected by this over the last few years. We lost Philadelphia first, and then Harco, the biggest one to really hit. The most recent big one to hit was K&K, because K&K had been the stalwart for so long, wrote in most states and would write any sized business. And we'll talk a little bit more about how that affected the market. Most recently, Century had pulled out of non-Harley dealers 2 years ago. And as we understand it, they're leaving the Harley space. So what's happening right now is there are fewer options, and everyone's having to go to those fewer options. And I would just say that from a preparation standpoint, this is not a phase. It really is the new normal for the foreseeable future until someone else or a group of underwriters will come to the market to understand what's going on. There are fewer options and stricter guidelines, and that's really a lot of the topics I'm going to talk about today. I just received an email while Dave and I were prepping for this that one of the biggest underwriters that I write with is no longer underwriting dealership test rides, which I'm going to get off this call and get on another bunch of phone calls after this, because that's what's coming. And we'll talk a little bit about that in these slides. So that's the current state of where things are on June 12th, 2025.
Sure. Yeah, Zach, if you don't mind, I'm going to interject here. Just another quick poll question. Dealers, if you don't mind just hopping on again, have you been affected by an insurance underwriter exiting the PowerSports market in the last few years? So yeah, you can see here, we do have some yeses and some nos, but we're concerned that it could happen. And so, yeah, there's a wide variety of options here. Yeah, appreciate everybody participating in these. Just going to help us get a better feel for the landscape with all these questions. Also helps you get a few more points on the Edge dealer leaderboard, as a lot of you guys know too. So thanks for taking the time here. And then we'll go ahead and share these results so you guys can see them. So yeah, three have had to switch carriers, 43%, 57% say no, we're concerned, but it could happen.
Anecdotally, that looks about what the conversations that I have on a regular basis. So
okay.
You're not alone, if that makes you feel any better. Thanks, Dave.
Yep.
All right, so moving on to my next slide here. All right, why it matters. So we talked a little bit about new markets not replacing. Doesn't mean it won't happen, but as of right now, I haven't gotten the phone call to say, hey, send me all your business. And what's happening now is that garage carriers are overwhelmed. And if we're looking at what is going to potentially happen now in the Harley space, they're probably 200 to 200 Harley dealers that starting this summer over the next 12 months will be non-renewed by their current carrier and will have to flood the market. And as a result of that, like I just talked about, there's a higher selectivity in that. So it's really important that you've got your ducks in a row, and that's that's your operations. How understanding how things work, being able to give a full narrative to how your business works to your broker, so that can be translated to the market. In this space, so much of what we do is not only just filling out spreadsheets and bugging you to get all your information and send it to the market. It's also the storytelling with the market to say, okay, what was this claim? Tell me what happened here. What is their process for test drives? What is their process for events? How are things working? There's so much more to insurance than just plugging it in a computer and having a quote printout. That is absolutely the model in the personal line space. You go to geico.com, quote, it pops out. You go, I like that quote better than the Progressive quote, and you bind that. That's not how this works in this space. These underwriters are deciding if they want to take a risk on you, and so we're going to have to tell them a story. Additionally, with these garage markets being overwhelmed, they're being much more selective in who they go with, and the biggest point, pain points right now around even starting the conversation for underwriting are these 3 points here. Smaller dealerships, after the exit of K&K, smaller dealerships are the ones that have really suffered the most. I don't know if we have anybody on here that has seen this, but whether they're independent stores or they have a manufacturer, OEM stores, the smaller stores are really there's not a whole lot of places to go, and they're in some states. There are admitted carriers and non-admitted carriers, and some states don't allow non-admitted carriers into their states, which even shrink the pool even more. So if you are smaller and your renewal's coming up in 6 or 9 months, you may want to really start thinking about what this looks like, because it's created some real chaos at renewal. And if you're, and I'll talk a little about this later on in the presentation, but if your broker's not on top of it, if your broker doesn't understand this specific business, that they're a generalist and they don't play in this space, they may be caught off guard. I have just as many conversations with dealer in the last year. I've had just as many conversations with dealer prospects that I have with brokers that are calling me to say, what in the hell do I do? I have a renewal in 15 days, and that's a really bad place to be. The next is, and I know this is the PowerSports business, and a large majority of the products that we sell are in this UTV ATV side by side space. If I were to take let you know at what levels it's the easiest to write business, it would be first, two-wheeled operations only are the easiest to write, and I say easy, but it's still very difficult. But that allows me, they're the most amount of markets available for two-wheel only dealerships. Harley Davidson dealerships, a lot of European dealerships fit into this space. The next step down would be dealerships that sell UTV ATV side by side. Now, if you're a multiple location dealership, maybe one location sells UTV ATV side by side, and the percentage of sales are below a certain number, it may open up some of those two-wheel markets. But there's a big fall off from if you're selling the UTV ATV exposure, because the exposure is different. The underwriters view these as they're non-licensed vehicles, so there could be kids driving them, and the product liability side of this is higher. So that's the second step. The third step is if you have any kind of watercraft operations, if you're selling personal watercraft, or if you're selling personal watercraft, and just like the last example I gave, and maybe it's below 10% of total sales, we could probably get you in with the same garage policy. If you're a full-fledged boat dealer and a powersport dealer, there's a really good chance that we're going to have to separate those policies. The only underwriter that I'm aware of right now that's doing this on a regular basis is Zurich, and Zurich's only available in certain states, and Zurich's also a non-brokered market. They're direct. So these pieces are becoming more and more difficult to right. And in some of these instances, if you're with an underwriter and they're happy with what you're doing, maybe you don't want to move right now while things are so tumultuous because when they start peeling off dealers, um, they're going to peel off the new business first, and then they'll peel off the existing business.
Sure. You did, you brought up the concept of, you talked about somebody that said theirs was up for renewal in 15 days.
Oh
We
yeah,
were talking last week, and you brought up somebody had called and says theirs was up for renewal in 3 days.
yeah,
I know you love taking those calls.
I've got those. I've got some of this in later slides, but Dave, thanks for bringing that up. Getting ahead of it is very important because there is a time window when we can be effective, and there's a time window where we can't be effective.
Right.
Yeah.
Yeah. So, guys, if you haven't yet, looks like everybody's hopping on here though. As you see these polls pop up, when do you typically start your insurance renewal process? Half of them are more than 90 days out, 60% now, more than 90 days out. Awesome. Oh, great. Up to almost 70%. So that's good. Um,
We got
60 to
rock
90
stars
is
on this
another
call.
17%. And then less than 30 days. And I don't know, that's your sweet spot there, Zach. We have about 20%, have about 20% that are in that area.
Yeah, no, that's probably anecdotally right as well.
Cool. Appreciate that.
And that's a topic coming up in a later slide too, so we'll talk about that.
Awesome. Go ahead and share these results with you guys. And you'll get these here, if not tomorrow, early next week, just a recap of all these poll questions.
That 17%, we need to have a conversation over here at the bottom.
Right.
Not 10 days before though. All right, what's driving this? The biggest issue here is that, and I think that speaks to kind of why I got into this and the long game here. Garage programs are built for auto dealers, just like everything else in this industry that we have. Uh, Almost everything we have in this industry is built for auto dealers, and then we get the crumbs in the PowerSports side. So the risks are different, the exposures are different. They're not hosting a poker run at their parking lot at the Hyundai dealership. They're not doing community rides at the Kia dealership. So the exposures are different, and all of those exposures create different. I wouldn't necessarily say more risk from my perspective because I think that there are dealers that do this very well. It presents a different risk that the programs are not designed to be able to handle. So first point here is the exposure is lower in an auto dealership for the underwriter because the program is built for auto dealerships. In the PowerSports community, we have to deal with the community. Our sales are based off of renewals and referrals, and so and not renewals. I'm using insurance language here. Repeat business and referrals. And so we've got to constantly be involved in throwing events and doing things to keep our customers engaged, and that presents different types of exposures that your policies probably do not cover. But there is a way to make sure you are covered, and we'll talk about that in an upcoming slide. And these added exposures need additional controls. You got to put processes in place for all of this stuff. Just like you have a sales process, you need to have a test ride process, you need to have an event process. You got to think of it the same way. Because you've got to figure out the best way to market yourself so that we can market you to the markets to show that you are a good risk. Look, things happen, but if we can prevent as many bad things from happening, then we can all still stay insured. This is a key risk area right here. I have two key risk areas I'm going to talk about today. The first is our test rides meeting underwriters' expectations. Like I said, there's two markets right now that have really tightened the screws on their test ride policies, and one of them just told me they don't do it anymore. So that's going to be that'll be a follow-up I'll have Dave send out to you guys to let you know if that's going down. But these are the barriers to entry now, and I guarantee that most of you are probably doing most of this, if not all of this. Making sure they have a motorcycle endorsement on their license. I'm speaking specifically to motorcycles right now because those are the on-road vehicles. With UTV, ATV, typically that's going to be off-site or if you have a range or somewhere on your location. Matching the skills of the rider to the vehicle being written. And look, I was on the European side, so I'll give an example there. We're not going to put a brand new rider that just came in after the MSF course on a Panigale superbike for a test ride. Making sure there's a process in place to vet these customers to make sure that they're matching their skills as best as you know. Signed demo waivers, and these need to be approved by underwriting. And what's really been frustrating over the last probably 6 weeks of this is that you know you may have all the risk management process in place. All of this may be going on, but you maybe started your demo waiver with a boilerplate that you got from your manufacturer, or you got from a consultant, or you had your attorney write up, and they're going to cover everything in there. I had an underwriter this week push one back to me because it said, we're not going to allow anyone else to ride the vehicle. You had to initial next to that. It said, I will not, I will not be under the influence of drugs or alcohol. You had an initial next to that. And they kicked it back to me because they said, we're assuming that if the customer is signing this, that they're taking the vehicle out by themselves for as long as they want. And I said, that doesn't assume. I said that you have the process. The process says that that the employee leads the test rides. I
Right.
was like, and you also don't want someone to say they're not drunk when they come into your store to ride a bike. So it's just, there's a lot of pushback here. This is the biggest friction point I've been dealing with up, as early as 2 hours ago. What's going on? Proof of insurance, and I'll give you a personal example of this from my own store. We always required that the customer, our demo waiver not only released us from liability of the individual, it also released us from liability from the actual vehicle. And so we would have them give us their insurance, or if they didn't have comprehensive insurance, that they would acknowledge that they would be responsible for the vehicle if they crashed it. I had this happen to us 5 times in 17 years, and I was able, and we were able to get it taken care of all 5 of those times. So, thinking about that piece of this as well. Correct riding gear. The guy in flip flops and shorts, in a skull cap helmet probably is not the guy you want to put on a bike. It's an opportunity to, however you want to handle that, but making sure they have proper riding gear, making sure you have a designated route. And the designated route, they really want to have all right turns because left turns have to cross traffic. And this is the absolute non-starter if you don't have employee-led test drives now for most of the markets that I'm talking to. And this has really been something that has been enforced dramatically since the beginning of the year. And a lot of this, guys, is having to do with the fact that with these other underwriters leaving and more of these motorcycle dealerships taking up bigger percentages of the book of these car dealers, they're getting really worried about it, and they've told me that they've been burned on it a bunch. I have not had a client that's had a demo issue, but doesn't mean it doesn't happen out there.
Right. Zach, on that employee-led concept, is that familiar? You going back to even your days at the shop?
You know, that was not an underwriting requirement. It was a sales process that we would do.
I see.
In my Sam Dancer School of Sales Training, you go out with 2 bikes and you switch off halfway,
Sure.
so you can decide which bike you want to go with. But no, that's the employee led part is something that is staunchly being enforced really in the last 6 to 8 months.
Right. Along those lines, let's see here if we can pull this one up. Well, yeah. Well, stop sharing. Oh, sorry about that, guys. Let's get this one on the test ride procedure. So if you guys wouldn't mind just taking a couple seconds. Do you have written procedures for customer test rides that meet current underwriter standards? For dealers that are on the call, if you could just take another couple of seconds to help us out just to get a better feel for where folks are with their written procedures for customer test rides as related to underwriting standards. Let's see here. So we have some good sign here. Yes, documented and followed consistently. It's getting a good 60% response, and somewhat being informal or inconsistent would be the other responses here. So I'll go ahead and share those results with you. Yeah, so Zach, just another Another, I guess, way to emphasize the fact that hopefully we can get that 60% number up to 80 or 90.
I think 100 would be great if you want
Yeah,
to.
I'm sure you do.
Um, just don't tell me.
Right.
I'll tell you this too, guys, before I go to the next slide, is that we can't, and I usually have this as a slide in my presentation, and I didn't include it today, but you need to get away from looking at your insurance as a commodity and really thinking of your insurance as a risk management strategy. And it's more important now than ever to make sure that you've got great processes in place to avoid any issues happening. Look, you wouldn't want to have an issue happen if you weren't paying ridiculous premiums, but you definitely don't want to have it and risk either number one, your insurance going up, or number two, your insurance being dropped and
Hmm.
having to deal with litigation.
Right.
All right. Risk area number two, events on and off-site events pose coverage challenges. This is a big issue that has really come up a lot recently with me as well, specifically with talking to underwriters. I realized that I put events twice in this headline, so I apologize for that. I've read this thing like 150 times.
Yeah, that's what happens.
Um, the Most, if not all, insurance policies are not going to cover events that are happening outside of your normal business operations. What that definition is depends on the underwriter. It could be grilling hot dogs on a Saturday outside your store. Well, I'm not telling you you can't do that. What I am telling you is that anything you're doing outside of what a normal business operation would look like, pass that by your broker to pass it by the underwriter, because the underwriter, might just say, hey, that's fine. But they might say, hey, it's not fine. And if it's not fine, then we can go out and find an event policy for you just to cover that specific event.
Hmm.
I have an example of a dealership that had an event where they had a band and they were serving alcohol, and there was a stunt rider, and the stunt rider brought fireworks,
Hmm.
and the stunt rider hit the fireworks. They fell over. They went into the crowd. They burned a bunch of people. So he calls his insurance broker. There's absolutely no coverage for that, and there was no event coverage, and all the certificates that were provided to him didn't follow through in anything either. So really planning ahead. If you're making your event calendar for the year, make that part of the underwriting process, or make it part of the process as you go through the year. Be in constant communication with your broker. When you're buying insurance, you're not just buying an expensive PDF. You're buying the relationship that you have with your broker to be your advisor. You should look at your broker like you look at your CPA or your attorney. And this is one of those things where that should be something you should be running by your broker whenever you're doing these types of things. If you're uh, displaying a bike at an event, in the middle of town for the 4th of July, you get that approved. Get that, don't just have us send a certificate, get it approved. And this is something that we're seeing a lot of, and the underwriter approval is important. And there is a cost to it, but there are event policies you can buy that will cover these events that are not regular business operations. Documentation, communications, and transparency is crucial. And this is a very overarching statement, but I'll talk specifically to a couple points of this. Communication and transparency with your broker is incredibly important too, because we can't write policies off of assumptions. We have to write policies off of what is actually happening in your store. So having that dialogue is really important. Do not withhold information, because what you don't want to do is have something come up in the end. And policy audits can lead to surprise cancellations. It can be as simple as, we didn't get the information correct. The information that was said about the building maybe wasn't correct, and that audit happens, and they go, oh, you have 10,000 more square feet, you owe this much more premium. But also, more recently, some of these underwriters have then been going back to dealers recently with me to say to do a operational audit, where they go, hey, what is your test ride policy? And you've got to sign off on it. And if you don't want to sign off on it, then you're probably going to get a 60-day cancellation notice. And if you get a 60-day cancellation notice, there may not be anywhere else for us to go for you. So, making sure that you're having these conversations and you're being as transparent as possible and really giving the correct information as best to your knowledge when we're filling out those applications. Look, they take some of these clients that I have with multiple locations, it'll take weeks for us to be able to put it all together. That first initial conversation when someone's moving is really important. So it's good that we get a really good base layer so that when we're renewing, we're just auditing the current information that we have.
Right.
And then operational lapses become liability traps. I think a great example of that is the one I gave about the event that happened with the fireworks. If you're not covered, there's a trap right there for you in liability. Insurance must be an operational priority. I've stressed this a bunch. Communicating with your broker throughout the policy period. And I say that too. I mean, look, if you're even considering buying a second store, or you're considering, adding adding a bunch of new employees, or building a new piece onto your building, don't call the broker 2 days before you need the certificate. Let your broker know what's going on so that they can start preparing the market. I also bring this up too because let's just say you have multiple locations. A lot of the times, or you're buying multiple locations, it's much easier for us to endorse a current location, endorse a new location onto a current policy than it is for us to write a brand new policy for that location. Additionally, when you're writing two separate policies, you don't get some of the crossover and shared limits, and there could actually be an additional cost associated with that as well, because you have two general liability and garage liability limits instead of one that can cover both operations. I know we had this poll question earlier. Start renewals 90 plus days out. A lot of my markets won't accept any submissions within 30 days. And if you're at that point too, you got to think they're going to hold on to it for 20 of those 30 days, and then they're going to get back to us, and then we're going to have 1,000 more questions. So as quickly as we can get to market as possible, the more success we'll have in being able to turn the information back to you as quickly as possible. I say that, and we're currently living in the month of June, and for whatever reason, there's no science behind this, but it seems to me that the majority of renewals for the clients that I talked to, it happens in that June or July time period, and the underwriters were overwhelmed. I just had a client that we submitted at the end of April that's renewing on the 21st, and we just got the information yesterday. And that when we asked for the drop dead date to be last week, there's not a whole lot of control we have over that. And then of course when they get us the quote, we have to review it and then go, hey, can we adjust this here? Can we adjust this there? Can we adjust, so there's a lot of work that goes before you even get the proposal, or at least a lot of work that should happen before you get the proposal.
Right.
And also audit, again, I've said this over and over again, audit procedures regularly and consult the broker for big changes. Or if you have a question, hey, I'm thinking about doing X, how will this affect my insurance? Use us, because that's part of your premium spend is the consulting you get from the person that is helping you go through this process with you.
Sure. Yeah, I like that concept you had earlier of treating your broker as you would your CPA or your attorney, just having that being able to tell that story effectively and efficiently with those updates.
And I'll tell you this too, there's an incredible amount of, and I'll talk about this in a later slide too, but there's an incredible amount of I guess you could say work that happens before anything is bound. We get paid when the policy is bound, but if we go through the whole process and we don't win, we're not. That's not a problem. But so you got to think of all of the, if you're thinking what your premium dollars are being spent on, think about the entire process of what goes into this. It's not just the piece of paper.
Sure. What
should be documented? These are just a couple bullet points. Some of this falls within the topics we've talked about today. Some of this is topics we didn't talk about today. Do you have a vehicle use policy for your employees? And that would be anybody that's driving your company vehicles. That would be anybody that's managing test rides. That would be anybody that's maybe taking vehicles home, which creates another issue as well. You want to, if vehicles are going home, With employees, you want to let the underwriter know that if it's not on a regular basis, you may want to consider um, subscribing to like a twisted road service where the employee would pay for insurance for the time that they have the vehicle. Mechanics use of vehicles. The mechanics have got to test ride the vehicles a lot of times after they work on them. What is your policy in place for that? Your event protocols, we talked about that. Also, dealership security. We haven't talked a lot about property exposures, but how are you securing your facility while you're open for business and while you're closed at night? What does that look like? Don't leave keys in vehicles. Making sure that if you have roll down gates, those are good. Making sure you reinforce doors, bollards in front of windows. These are all things that can prevent smash and grabs. Customer sales and F&I process. There is a crossover between your commercial property and casualty insurance and the compliance of your finance office. There is a limit within your policy that's called E&O, errors and omissions. So, making sure that titles are clear, making sure that truth in lending is being disclosed. All the things you would do for your compliance in your office is also being covered by your E&O policy. So making sure that's in place too, and it's followed consistently. I have had claims in this situation, where a customer will take a trade in and the title's not real because the bike was stolen. And then how do you deal with that? Making sure those pieces are in place. That's that kind of F&I and P&C crossover. Broker matter does fit. Broker fit does matter. Choosing a broker that understands your business is really key. And one major point of that is specific to our business and specific to other verticals. There are markets that will only appoint brokers if they have an expertise in the business. So if you're using your broker that is your client or your neighbor or the guy across town that's just writing businesses and it doesn't have an expertise in this space, they may not have access to all the markets that are available. And as the opportunities for writing business have shrank, it's really important that as you're interviewing people to do this for you, that you've got someone that has access to the correct markets. K&K was always the catch-all for this because anyone can be appointed with K&K, and they wrote in most states. K&K is gone, and that was a lot of really tough conversations I had with brokers that would call me crying with 10 days to renewal because there just wasn't anywhere to go. Brokers don't just quote; they advocate. We are your advocate. We are your voice in the insurance market. We're the ones that are fighting for you on the front lines of the market and having to deal with the underwriters and losing sleep over, I don't want to have to give this news tomorrow, but let me get all the facts so I give this news. That's really make them work for that part of the premium. I also bring up here direct markets versus brokers. In our PowerSports space, Zurich, Federated, and Century are direct markets. And Century is now a non-issue, but if you've been with them, they're all direct markets. Absolutely nothing wrong with these direct markets. But what you need to understand is that if they're quoting you your business, they're only quoting you their product. They're not going out into the market to create a bespoke product. So if you live in a state where maybe it was an option to get all three of those to quote, then yeah, you are getting different options. That brings me to the conversation of brokers. Brokers, and this goes across all of insurance on the middle market side, two brokers cannot approach the same market. So it's really important that you don't send two brokers. In a perfect world, you wouldn't send two brokers into the market to compete. But if you do send two markets into the market to compete, you need to make sure you understand what their strategy is, especially with as few markets that are available now, because if you send me and someone else into the market without a plan, I may be able to go grab the garage piece that's the best possible option, and they may be able to go out and grab the dealer inventory piece that's the greatest option. But you'll never get presented those together because each one of us grabbed those quotes. So the old adage of, oh, let's just send them out to compete doesn't really work in this space. It's really important that you interview and get a broker that you trust to go out and do the right thing for you and make sure they present a plan to you on where they're going to go. And my last point on this slide is transparency is key. Probably about 25% of the conversations that I have start with, okay, I always like to start with sending me your policies so I can see how you're placed. And then from there, I can start putting together the story. If I don't have the premium included in there, if the premium is whited out, then I have half the story. And because there's no secret sauce here in this. It's not like buying a vehicle. You can't present the quote and then the customer goes knock $2,000 off of that, and you go back to the sales manager and go, no, you knock $2,000 off, he'll buy it today. That's just not how it works here. Understanding the full picture is important because if the premium is not in there, then we don't know what you're paying. And so it could tell the story of exposures being off. It could tell the story of, hey, really are paying way too much, or actually you're in the right spot. When you're dealing with me, and I would hope that when you're dealing with anybody, I review policies all the time. Probably about 30% of those actually go to market because, and I think there's some individuals on the call today that I've done this before where I reviewed everything. Everything looks good. There's nowhere else I can go. And if you're with a Zurich, I can't do anything with it. If you're with a broker that's got it and you're not unhappy with the broker, we can take it over. But I have no problem telling somebody, hey, you're in the right spot. And feel free to call me anytime just to have me look at your policies to review and give you my expertise from what I see out there. But not giving that premium number is like playing without a score. And what ends up happening if it goes back to the previous point. If you've got two brokers in the market, and I do find an option out there, and we do all the work of gathering all the information from you, and you're sending me 400 spreadsheets with all the information that I need, and 400 is a lot, maybe four. If we get to the point where we're not successful, we've now wasted both of our times in gathering that information in the market's time, where I could have ended the conversation at the beginning and say, I can't be competitive with this. And I know I can't be competitive with this because of X.
Right.
So,
yeah, guys, make sure you do reach out to Zach. I had a lot of great feedback about some of you guys here who I can see on the call who've talked about engaging with them. And yeah, please, it's been awesome to have Zach and Apiar as partners just about from the beginning, and it's this type of engagement and support of the NPDA that definitely sets Apiar apart for sure.
thanks, Dave. All right, final thoughts here. And I got two more slides after my final thoughts, but almost final thoughts. Risk management strategy is a competitive advantage. You got to think you're think of it as a competition, and let's prepare for competition. Let's go be Mark right here with this trophy above his head. There's nothing passive about insurance and risk management. You've got to stay active. You got to stay on top. I love this this formula here that ChatGPT created for me. Success equals preparation plus communication plus the right partner. That's really important here. And challenging markets don't eliminate opportunity. They just demand strategy. And you've got to stay ahead of this. If you guys are interested in talking to me, please reach out. On the next slide, I'll have some information, and Dave can get it to you. And I know it's all over the internet. You can Google my name as well. We would typically start with a policy review, risk management review, and then from there, we'd have a strategy meeting with a plan on how we'd go to market, and then understanding the heavy lift, because we're only going to be as successful as the information that you provide us. So it's really important that I always like to set the baseline of, I'm going to ask you a million questions and I'm going to need 1,000,001 answers. But I can guarantee when we get through this, I can at least provide you peace of mind to know that you've been every place in the market that would look at you has looked at you.
Right. We could kind of put a bow on this one here with this final poll question. Your approach to risk management, which of the following best describes your dealership's approach to risk management? If you guys wouldn't mind taking another couple seconds here, that'll be helpful for us. We have formal documented procedures and audits. We have some informal processes, but nothing formal. We mostly rely on common sense and experience. and risk management isn't something we actively focus on.
Let's hope nobody
So
said.
yeah, so Zach, fortunately, we were at 0% on that last one, so we've got a good
All right.
baseline. Got a good baseline to
I'm
work
just too
with here. So
embarrassed to answer the question.
right. Yeah. Let's see here. So yeah, yeah, appreciate everybody with the participation in the polls. That helps everybody get smarter about all this too. So I'll go ahead and share these so you guys can take a look. And again, we'll get you a little graphic package here in the next couple of business days.
We'll look for the two that mostly rely on common sense and experience. That just I mean, like put that on me or whoever is your broker. I think that'd be the common sense and experience.
Right.
You're already paying the premium. Um, I'll tell you this, guys. I want to close, and I always close with this whenever speak, especially to 20 clubs. Guys, I'm coming at this from your perspective. I sat on your side of the desk. I understand all the challenges that you have just to open your doors every day, especially in the current environment. So, if I could take any of that off of you, at least give some peace of mind to let hey, this is taken care of for you. I'm never going to tell you what you want to hear. I'm going to tell you what you need to hear. That's my approach, and that's our team's approach to how we look at risk management and insurance. So thank you so much for the opportunity today. Thank you, Dave. Thank
Yeah.
you, MPDA. I don't know if
We
were there any questions
Yeah,
or
we do. Yeah, Jim Palmer, who we both were fortunate enough to meet at our inaugural Dealer Connect last year in Columbus. Don't forget September 21 to 23 again this year for everybody on here. You should be there.
I'll be there.
Yeah, so Jim had a question. Can you clarify what insurance we should ask for on demo bike rides? Can you clarify what insurance we should ask for on demo rides?
So that part of your exposure should that part of your coverage should be included in the garage package. And there should be questions that are asked of you about your demo process when you're going through the application process with your broker. So if you're not answering those questions, you probably don't have the coverage for it. I will tell you this is that I'm kind of going off the cuff here because of the email I just received. I've had some conversations with Twisted Throttle. For anybody who doesn't know them, they offer rental insurance, and they have a way to qualify customers based off of reviewing their insurance and their license and running a background check on them before they send anyone out. There could be a moment where you may have to have a supplemental situation for your for demo rides. And I know that's a big closing part of what you guys do and what I did in the business. So I know that's a kind of a roundabout answer to your question, but that's the test ride answer.
Yeah. Yeah, and guys, just here as we wrap up, if you do have any similar type questions, feel free to drop them in the chat or the Q&A is fine as well. And with that, I believe without any other ones coming over, obviously you've got Zach's phone and email there. Give him a shout.
I think the
And
QR code goes to our website, and there's a way to fill out information there. That's my cell phone number. You can call me right now.
perfect. Yeah, even better. Yeah, you can do that. But no, man, the turnout today was awesome. A lot of repeat performers here on our Edge webinar series, and as well as some new faces. So thanks everybody for coming on board, and again for your membership and support of the NPDA. Had a couple here who also hopefully found the value in the $79.99 price tag of this, and I think we can all walk away saying that we got our $80 worth of value from learning about risk management for PowerSports dealers here. So without further ado, Zach, again, man, thanks for your support and again for the intelligence share today. This was super helpful.
Thanks, guys.
Yep, we'll talk to you guys soon.